So let's talk about what the VIX actually is. There are dozens of complicated academic definitions online, but I like to keep it practical here. The VIX is simply the market sphere gauge. When the VIX spikes to extreme levels, a market crash is happening. And when it stays low and quiet, the S&P 500 is usually climbing smoothly. But here is the single most important thing you need to know. Just checking how the VIX reacts to the S&P 500 is not enough to trade the VIX ETFs profitably. If you only look at the Spot VIX, you are flying blind. And in this series, I want to show you how I analyze volatility through the lens of VIXinsight. We're going to break down the exact mechanics, the chemical reaction between the SPX index, Spot VIX, VIX futures, the VXF 30 basis spread, and the ETFs themselves. And I call this framework the umbrella theory. So just think of the Spot VIX as the price tag of an instant umbrella. An umbrella that can be delivered to you anywhere the exact second you ask for it. So it's basically rent insurance, right? And naturally, the price of this umbrella depends on one main thing, the weather. When a heavy downpour starts, umbrellas get expensive fast. And in our financial ecosystem, the S&P 500 is the weather. When the S&P 500 has a long run of clear sunny days, people completely forget about rain. Nobody buys umbrellas, so the Spot VIX stays suppressed at low levels like 12 or 14. But then clouds start gathering. You can smell rain in the air. As the S&P 500 drops even a little bit, demand for protection rises, and the VIX moves up, usually on a much bigger percentage scale. Now think about the extreme case. A sudden, violent thunderstorm hits. So there's nowhere to hide and everyone panics and demands an umbrella at the exact same second. Supply and demand break down completely. During a real market crash, the Spot VIX shoots straight into the sky in a completely irrational way. And this exact spike is what the VIX gambler is always trying to catch. But what happens right after the storm peaks? You almost always see the VIX collapse back down very fast. Why? Because the worst of the storm passes, and more importantly, everyone who needed an umbrella already bought one. Panic demand disappears and umbrella prices crash back to normal levels. To see how this works in the real world, let's look at the first quarter of 2020 during the COVID crash on our VIXinsight dashboard. During that panic, the S&P 500 fell roughly 40% just in a few weeks. Meanwhile, our instant umbrella price, the Spot VIX, exploded from 14 all the way to 82. That is an almost six-fold increase in the price of rain insurance. And every morning before the market opens, our system automatically runs the data and publishes the daily VIX weather report on VIXinsight, classifying the climate into 4 strict regimes so you never misread the sky. So keep this simple mental model in mind. Generally, the Spot VIX moves in the opposite direction of the S&P 500. But if you think you can make money on ETFs like UVXY or SVXY just by watching this basic relationship, you are heading straight into a trap. And let's see why.